Welcome to the Bitcoin Macro War Room, where we jack into the market mainframe and derug the narrative. Plug into the pipes, M2, DXY, inflation, momentum, fresh prints, CPI, ISM, payrolls, rates, truth by facts, not vibes. Tweets and news rundown, meme to policy, curated, timestamped, tradable.
Welcome, you've got mail.
Copium not included. Roll the tape, let's invest like it's 1999, but with better charts.
Welcome back. God, I love that intro. I hope you enjoy it as well. The guy picking up two phones, I'm like, what is he? Buy, sell, whatever. What a week it's been. I got some new charts for you on deck, and my goal is just to bring as much alpha as I can for you every week in a 15-ish minute video so that you don't have to spend the time like I do looking at all the data and all the charts and kind of trying to figure out what's next for Bitcoin. So stick around towards the end because I do have some interesting tweets to go over, but let's kick it off with some of the new charts. And we'll start off with the classic chart that we always take a look at with some spice added to it. So here it is in all its glory. Bitcoin here is in black, and you can see that we've really diverged. The one thing I added to this chart very recently is an overlay of the Nasdaq, because Bitcoin has been correlated very highly with tech stocks, and you can kind of see that correlation here on the chart. Yes, there have been deviations, but it generally does track with tech, and you can see we've opened up a huge gap with the Nasdaq. So something to keep in mind. The other two call outs that I wanted to bring sort of to your attention right away, something I was looking at was my indicator here on the bottom, the regime tracker has fallen out of this trend line channel. And you can see this has happened once before and we've spiked back up. We'll see if that's actually going to be the case here coming up, but it makes sense with the price weakness in BTC. So if you take a look at sort of where we've fallen off here, and what Bitcoin price has done since then, it's correlated pretty strongly and has been a good signal. I think that this will be turning around. We've also had a drop in global liquidity. So the M2 tracker here on the top in the green box has come back to the neckline of where it broke out from. So a couple of mixed signals here. But again, overall, I'm very bullish going into the end of the year. I think a lot of this can be explained, or a good amount of it could be explained, by the Fed rebuilding the Treasury General Account recently back up to their sort of nominal levels of 800 billion. But we'll get into some of that a little bit later. Let's take a look at some of the other charts I have for you today. So we'll start off with this one. And again, I think I've shared this before maybe once, but this is my sort of entire thesis summed up into basically one chart. So you have the ISM here in the middle panel and the dollar here on the bottom panel. And you can see that every cycle peak has peaked with the ISM peaking and the dollar peaking. Now this chart on the bottom is inverse. So this is actually, when it goes up, the dollar is dropping. A weaker dollar is good and bullish for risk assets, which is where we are today minus the ISM, right? The ISM is still below 50, one of the longest stretches in history. So we'll see how this sort of pans out. We're going to look at the data next. And I think there's some clues in there that might show us that the ISM is going to start to turn here and going into expansion. One last chart I want to share, which is the monthly, right? It's always important, I think, to zoom out a little bit, especially with the price action this week. You know, I did mention last week in the video update to keep your pants on. September is not over yet. I think we were at about 117K last week when I did the video, and I told you all to sort of relax, chill. It's not over yet. We still have some time. So we did get a drop in prices. I think we were at about 109,000 at the end of the day yesterday. So zooming out though, and taking a look at the monthly, you can see we're in this beautiful channel just going upwards. Again, this is on a log scale, so keep that in mind. And in my eyes, and what I'm looking at here is we're just building a base. Now it's taken a long time, right? This is 1, 2, 3. We're in the 4th month of this sort of chop, but I feel like we are building a base. This will result in a next leg higher. And you can see if we do hit the top of the trend channel again, like we've done numerous times before so far this cycle, that will send prices to, 170, 180, 190, 200,000 potentially. But we're going to look at my system because that is the most important part of the video. Before we get into the system though, let's take a look at the data releases for this week, because there was a lot of data releases this week. And I think the most important ones to call out, the PMI misses were kind of whatever. They didn't miss by much, by a decimal percentage. And new home sales came in, some of this data, honestly, like 800K on the nose. I have a hard time trusting some of this data. Let me just put it that way. Regardless, Richmond Manufacturing Index did get an ugly miss. So that's not a great sign. If you kind of zoom in here, it's been just sort of negative for the past almost 3 years. So hopefully that starts to turn up. Again, pretty much all of this, you have to keep this in mind when we look at this, is that this is very lagging data. All of this should be, in theory, priced in already. The markets are always forward looking. And I think the goal for all investors should be to live in the future and not in the present, or definitely not in the past, which is what a lot of these numbers are showing. I think the only thing you can take out of these in terms of future probabilities are things like the core durable good orders and the durable good orders, which did have a massive beat, which is really good for potentially the ISM actually coming out into expansion. So we'll see if that's actually the case. Core PCE also, which is the inflation numbers, came in line, which is really good. And that's positive for the potential for more Fed cuts this year. And that's what we're going to look at next. So the FedWatch tool, as we always do, there's an 87% chance currently of a cut in October on the 29th. So coming up here in a little over a month. At this point in time, it's pretty much a shoo-in that they're going to cut. There's a 12% chance that they will not cut. I don't really foresee that happening unless we get some really crazy data out this month. And then for December, the most interesting thing to me here was a 32% chance that there will not be a third cut. Whereas a couple of weeks ago, it was basically a shoo-in that they were going to be doing 3 cuts. Now, there's still a 64% chance that they will do a third cut, but we'll see how these probabilities sort of change over the next couple of weeks. And again, the probabilities chart, nothing much to glean. It just moved a little bit to the right in terms of the weighting for the percentages. So that's the FedWatch tool, and probably what you're here for is my system. So we'll take a look at this, and immediately you could see some changes. It looks cool. It's got I added some colors, so I hope you enjoy that because I think it makes it a little bit easier to understand. So I'll go over it really quick. You can see the legend down here. All the stuff in yellow or gold, whatever, is my paid institutional research stuff that I pay for on a monthly basis, where they do a lot deeper analysis than I do. I can't tell you what it is. I can't show you what the data is, but I basically composite their scores or their results, what their current stance is, and they are all still bullish. So these are all still risk on, and these are the most important things in my system by far. So take note of that. Some of these below that I use myself that I can share have gone risk off, but the overall sentiment is still risk on and bullish. Usually when these have gone risk off during this bull market, that has signaled a great place to add to my positions. So use that frame of mind when looking at this. All the institutional research, which is very long-term, is still extremely bullish. You can see for the liquidity and macro regimes, I colored them blue, purple, sort of light purple for the on-chain metrics, and then the strategy/technical is in gray here. So last week we were at 88% risk on. This week we're at 72% risk on. So it has weakened. And again, the last couple of times this cycle where my forecast has gone into sort of the 50 to 70% range has marked that a bottom is either in already or is very close to forming a short-term bottom. Obviously, in a bear market, this would be completely the opposite. You'd be sort of selling the rip. But anyway, that's the system. Still risk on. I'm still fully invested. Nothing has changed in my positions. I have not sold any spot or anything. I'm actually looking to get into some leveraged positions via IBIT calls for June of 2026 for next year. So I'm slowly scaling into those positions at the moment, but I still think we potentially could have further to go. I would not be surprised to see Bitcoin retest sort of 103,000-ish in that area. Scary, yes, and that's exactly when you want to be buying, when your stomach has a pit in it and you don't want to buy. You just need to close your eyes and smash that button. So let's move on. Anyway, it is what it is. That's the system, still risk on. We'll take a look at some of the individual metrics. So DXY, again, still bullish, still positive. This has not changed, and I don't foresee this changing until pretty much the end of this cycle. So you can see how it's performed. The MVRVZ score, this is a full view. I wanted to share this first so you can kind of see how it's actually performed over the long term. And it's done an extremely amazing job, minus like one of the earlier cycle sort of areas here. But there wasn't as much good data here. So we can zoom in a little bit. You can see this has gone risk off currently with the current price action. For STH, again, this is the full view. So this performs really well as well. And then if we zoom in, this has kept risk on. So we bounced right off STH, and this might actually be a little delayed. Yeah. So you can see I just refreshed it. Let's zoom in a little bit more. So you can see it has signaled risk off because we have dropped underneath the short-term holders realized price. So that is why it has been risk off here on the system as well. So that's pretty much that. And then the bull bear trend, again, I'll refresh this just in case, but I'm pretty sure that this is still risk on, but it's decelerating, meaning we are under the moving average. So that's it for the actual metrics, We'll take a look through Crypto Quant really quick just to see if there's anything interesting. Again, realized price STH, this is the same exact one I have. You can see if you zoom in, and this is why I built my own, because this is just way too slow for me in terms of how responsive it is with the amount of graphs in here. But you can see, let's zoom in even closer to a month, that this has gone just now risk off. So my system aligns with that. DXY, same thing. Interesting to note here is the Bitcoin heat macro phase is almost towards the bottom standard deviation line, which has historically been an amazing buying opportunity. So take that for what you will. Sharp ratio has come off a little bit. IFP is still bearish. That has been the case since we started this show. And then short-term holders are still buying. This is the last metric I'm kind of watching that I want to flip is long-term holders buying. Now I have other sort of theses about this, whereas, a lot of people have sat through so many cycles. They see the six-figure price and are just DCAing out, but whatever, I'll save that maybe for a different video. Again, retail investor volume is basically nowhere to be seen, but still sort of near the midline. OTC address cohort balances creeping up just slightly, nothing really to take into account there. And then smart DCA is signaling that this is a good area to DCA. So that's pretty much it. I am adding a new little section to the show, which is looking at the heat maps. So the liquidation heat maps, this is more for my short-term traders out there, but I think this is a relatively good gauge in terms of understanding short-term price action, and especially if you want to add leverage, if you believe that the next leg is up, which I do, this is something I definitely take a look at. The 2 week is kind of too close. What I like to look at is the 1 month and the 3 month, and there's some interesting things to glean from this. So from on the 1 month, you can see there's still a good amount of liquidations to be had up until about, I would say this is probably like 106K. And then if you go to the 3 month, it's even more stark. So let's take a look at it really quick. Yeah, you can see right here in basically 107K, 106.5, there is a huge amount of liquidation. So again, caution in terms of the current price. I still think there's some downside potentially to go. Could that be completely wrong? Of course, we're always wrong. We're always right. We're always both things. That's why you have to keep doing the work and keep trying to refine your edge and look for as much alpha as possible. But this 3 month liquidation map clearly shows to me, if we start sliding, there's a high probability chance that we clear out these liquidations. And if you want to go even super pessimistic, you would say that we probably would tag 103. This is why I'm looking at 103 as a potential sort of bottom before the next leg. And given how bearish my timeline has been throughout this week, if this price move were to happen, this would completely annihilate all the sentiment. People would capitulate. They would say, all the cycle top callers would be like, it's over. I told you it was over. You should have sold when I told you, et cetera, et cetera. And that's when we rip right back to 115, 120, 125K, and then potentially to new all-time highs. That's my thesis anyway. And we'll look at some of the tweets now that we got all of that stuff out of the way. And this is exactly what I'm talking about. This is a prime example of kind of the sentiment on my timeline. It's over. The bull market ended on September 13th. As I've been signaling, I'm selling everything. Here's my personal game plan for the next 2 years. And we can look at the actual chart now. The reason I brought this up is because I've seen so many variations of this, and it is such a mid-curve take. I'm sorry. I don't want to crap on people, but this is a really mid-curve take, because if you take a look at how he's actually doing this analysis, is time-based, strictly time-based. 151 bars for the first cycle, 152 bars for the second cycle. Again, this is a weekly, so it's 152 weeks. 151 bars for this cycle. And that's basically the whole thesis, that this is over, is the time is exactly like it was in previous cycles, and so it's over. This is kind of the same thing as the halving cycle nonsense that used to be a thing. It used to definitely help the cycles, but the cycles are not based on that. They're based on the global liquidity cycles. They're based on the easing cycles. They are based on the business cycle, the ISM, things like that. When Bitcoin was released initially, one of the first transactions had the 2009 bank bailout news story encoded in it. They launched right after the global financial crisis and the bailouts, and that coincidentally was when the banks started this liquidity printing machine, 0% interest rates, all that stuff. And the way that they did that was taking out debt that was maturing in 40 years. And that came out with the 4-year cycle in terms of restructuring the debt, injecting liquidity, all this stuff. The reason I believe, and a bunch of others, that this cycle is longer is the debt maturity that they've taken on more recently has been different in terms of time, where it used to be 4 years, it's now 5 years. Anyway, I don't want to go on an entire rant, but I'm going to come back to this in January or in December after Christmas, and we'll take a look at sort of where we are, and we'll compare it to this analysis in this chart. So I'm sorry, ex Cabo. I don't mean to, crap all over your thesis, but it's really bland. It's a low IQ take, in my opinion. Anyway, whatever. So Frank here, amazing account. I definitely suggest giving him a follow if you're serious about sort of macro investing and just investing in general. This week, we had one of the biggest liquidations to the downside of longs, and this hasn't happened in quite a while. I guess this last one was probably April. It's kind of hard to tell on this chart, but whatever. So it was people got wrecked this week. Leverage traders got wrecked. I don't do any leverage unless it's long dated calls. And again, I usually slowly scale into those positions. So again, we've looked at already. I just like this one because it's super clean, but you can see we bounced off. Now we're actually under STH, but historically in bull markets, and especially in this one, because in the last one, you never had a chance to buy under the STH. You have had a chance this bull market once, twice, 3 times, 4 times, and now we just got a 5th. So I'm using this opportunity. Another one, the SOPR trend signal here that they have. Again, it signaled a bearish signal, which makes sense, but you can see kind of how this has performed this cycle. And I'm not really a huge fan of it, but whatever. I still think Alpha Fractal does amazing work with their charts. Let me move my camera so you can actually see what the hell I'm talking about. But they do amazing work with the charts, so definitely give them a follow. I think they drop a ton of free alpha. So that's pretty much that. Mr. Wetson here. Bitcoin is already showing signs of exhaustion and very few are seeing it. Again, these are the charts that we just took a look at. He basically talks about social interest and could Bitcoin hit new all-time highs because profitability will remain low? Yes. So he's making the case for altcoins because there is a bigger sort of risk-reward profile for altcoins, which is true. I just don't have enough time to do specific sort of rotational plays. I stick to the majors. And if I do go into altcoins, it's going to be a mega cap altcoin like Dogecoin, for example. Or Solana or whatever. Solana is not really a meme coin, but in terms of meme coins, it would be Dogecoin or something else like that, mega cap. I really don't play around with micro cap or anything like that unless it's for a completely degen reason. So again, I just mentioned these cycles, the global debt refinancing cycle, the easing cycles. Here's an amazing example of this by Steve, easing like it's 2008 or 2020 into an AI boom. And that is one of the most important things. AI has changed the game. It has changed the numbers. These numbers here do not really make sense anymore in terms of how structurally critical the change has been in terms of AI replacing sort of human capacity, improving productivity, and all of these other things that are not going to show up in the numbers. They don't know how to show them in the numbers yet. And you just can't get me to be bearish. I'm sorry. Can't get me to be bearish. The system is still risk on. All of my research that I do basically every week is still bullish. Meanwhile, my timeline is melting down. I love it. I'll pick up the cheaper sats and sort of keep moving. So great chart here. And that's pretty much it for the tweets. And that's it. That's a wrap for this week. Again, I hope you enjoyed it. First of all, if you made it this far with me, cheers to you. Like, thank you so much for sticking around. I know sometimes I'm sitting here making these videos, screaming into the void, knowing that maybe like 50 people will watch it, but whatever. It's a good therapeutic session for myself to kind of put my thoughts out there into a video, challenge my own thesis, and potentially see, am I missing something? Am I wrong? Regardless, not to turn this into a therapy session. Hope you enjoyed this video. If you did, you know what to do. I'm not even going to ask you for it. And as always, I drop these every Friday. So have a great weekend. I'll see you next week. Thanks for watching.